Welcome. If you're a law firm owner, this is one of those areas that often gets overlooked until it's too late. I'm Jayden Doyé, CPA and founder of Prestige Accounting and Consulting. Today, I'll walk you through what the IRS actually requires when it comes to documenting charitable contributions for 2025 so you can protect your deductions and stay audit ready. Let's start with why this matters. As attorneys, you already understand documentation. Taxes work the same way. The IRS doesn't reward intent, they require proof. If your records don't meet their standards, your deduction can be denied, even if the donation was real. What I see with many firm owners is this: generous giving, but inconsistent tracking. So let's simplify this, starting with cash contributions. For donations under $250, the rules are simple. You only need one solid record. That could be a bank statement, a receipt, or a payroll record. But here's the catch: consistency matters. Small donations add up fast, but only if they're tracked properly. Now, once you go above $250, the rules change. This is where many firm owners get caught off guard. Once a donation hits $250 or more, a bank record is not enough. You need a written acknowledgement from the charity, and it must include specific language, the amount, the date, and whether you received anything in return. Think of this like a contract. If the wording isn't right, the IRS can challenge it. Now let's move into non-cash contributions. If you're donating items like office furniture, equipment, or books, you'll need more detail. A receipt with what was donated, when, and where. And here's where most people slip. You are responsible for assigning fair market value. Even without a receipt, you still need to document everything. As the value increases, so do the requirements. Now, the IRS wants the full story, not just what you donated, but when you got it, how you got it, and what it cost you. For law firm owners, this often applies to higher value assets. If details are missing, you need to explain why. And once you cross $5,000, it becomes much more formal. At this level, you'll usually need a formal appraisal, plus Form 8283. This applies to higher value donations like artwork, collections, or large asset contributions. This is not something you want to handle last minute. It requires planning. Now let's look at special situations that can easily be missed. Some donations aren't straightforward. If you receive something in return, like an event ticket, you can only deduct the portion above that value. If you travel for charitable work, you need detailed logs. Just like business expenses, and even uniforms have limitations. The theme here is simple: clarity and documentation. Let's build on that with volunteer expenses. If you or your team volunteer, there are additional deductions. Mileage is 14 cents per mile. You can also deduct out-of-pocket expenses like supplies. But remember, your time is not deductible. So again, it comes down to tracking what actually qualifies. Let's wrap this up. Before you file, make sure everything is complete, not after. Review every acknowledgement letter. Make sure the language is correct. And if you've donated non-cash items over $500, Form 8283 likely applies. For law firm owners, this is really about risk management. Clean records protect your deductions and keep you audit ready. Now, if you're unsure where you stand, if you're not fully confident that your records would hold up under IRS scrutiny, it's worth fixing now, not later. We help law firm owners organize, review, and strengthen their documentation so nothing gets missed. Scan the QR code and book your consultation. Let's make sure your deductions are fully protected and fully optimized.